Today in crypto. 2021 got off to a quick start, and the current crypto bull market has seen assets like Bitcoin, BTC, and Ether, ETH, shoot to new all-time highs on an almost daily basis. While new price highs are positive for investors, they do present a range of challenges relating to fees, transaction speeds, and the centralization of what is meant to be a decentralized ecosystem. Since mid-2020, institutional investors have been steadily flooding into cryptocurrency, and this is exacerbating the issue of scalability, high transaction costs, and lengthy confirmation times on the Bitcoin and Ethereum blockchain. Continue reading on Cointelegraph. XRP was trading at $0.30343 by 22:57, 3:57 GMT, on the investing.com index on Tuesday, up 13% on the day. It was the largest one-day percentage gain since January 7th. The move upwards pushed XRP's market cap up to $13,4866 B, or 1.43% of the total cryptocurrency market cap. At its highest, XRP's market cap was $31,58403 B. XRP had traded in a range of $0.28002 to $0.30360 in the previous 24 hours. Over the past 7 days, XRP has seen a rise in value, as it gained 27.02%. The volume of XRP traded in the 24 hours to time of writing was $9,13457 B, or 3.94% of the total volume of all cryptocurrencies. It has traded in a range of $0.2216 to $0.3688 in the past 7 days. At its current price, XRP is still down 78% from its all-time high of $3.29 set on January 4, 2018. Elsewhere in cryptocurrency trading, Bitcoin was last at $34,760.10 on the investing.com index, down 14% on the day. Ethereum was trading at $1,083.77 on the investing.com index, a loss of 2.09%. Bitcoin's market cap was last at $645.0278 B, or 40% of the total cryptocurrency market cap, while Ethereum's market cap totaled $123.12468 B, or 13.06% of the total cryptocurrency market value. XRP was trading at $0.30358 by 22:59, 3:59 GMT, on the investing.com index on Tuesday, up 18% on the day. It was the largest one-day percentage gain since January 7th. The move upwards pushed XRP's market cap up to $13.4866 B, or 1.43% of the total cryptocurrency market cap. At its highest, XRP's market cap was $31.58403 B. XRP had traded in a range of $0.28002 to $0.30362 in the previous 24 hours. Over the past 7 days, XRP has seen a rise in value, as it gained 27.02%. The volume of XRP traded in the 24 hours to time of writing was $9.13457 B, or 3.94% of the total volume of all cryptocurrencies. It has traded in a range of $0.2216 to $0.3688 in the past 7 days. At its current price, XRP is still down 77% from its all-time high of $3.29 set on January 4, 2018. Elsewhere in cryptocurrency trading, Bitcoin was last at $34,930.70 on the investing.com index, down 64% on the day. Ethereum was trading at $1,088.09 on the investing.com index, a loss of 1.89%. Bitcoin's market cap was last at $645.0278 B, or 40% of the total cryptocurrency market cap, while Ethereum's market cap totaled $123.12468 B, or 13.06% of the total cryptocurrency market value. Bitcoin price declined over 25% and it even traded close to $30,000 against the US dollar. BTC started a fresh increase, but it is facing a strong resistance near $35,800 and $36,000. Yesterday, there was a sharp decline in Bitcoin price after it broke the $35,000 support. BTC declined over 25% and it even broke the $32,000 support zone. It even traded close to the $30,000 level and settled well below the 100-hourly simple moving average. A low was formed near $30,359 and it seems like the bulls remained in action above $30,000. There was a strong recovery wave from the $30,359 low and the price climbed above $32,000. There was a break above the 23.6% fib retracement level of the downward move from the $41,199 swing high to $30,359 swing low. However, the price is now facing a strong resistance near the $35,000, $35,800 and $36,000 levels. There is also a key bearish trend line forming with resistance near $35,000 on the hourly chart of the BTC/USD pair. The main resistance is near the $36,000 level. It represents the last breakdown zone and coincides with the 50% fib retracement level of the downward move from the $41,199 swing high to $30,359 swing low. To start a fresh rally towards the $40,000 level, Bitcoin price must clear the $35,000, $35,800 and $36,000 resistance levels in the near term. If Bitcoin fails to clear the $35,000, $35,800 and $36,000 resistance levels, there is a risk of another decline. An initial support on the downside is near the $33,800 level. The first major support is near the $32,500 level. A clear break below the $32,500 level could lead the price towards the main $30,000 support level in the coming sessions. Technical indicators. Hourly MACD. The MACD is slowly gaining momentum in the bullish zone. Hourly RSI, Relative Strength Index. The RSI for BTC/USD is still below the 50 level. Major support levels $33,800, followed by $32,500. Major resistance levels $35,000, $35,800 and $36,000. Analyst narratives on why Tesla and Bitcoin crashed yesterday are many and varied, but a look at the Federal Reserve's minutes from its December meeting could give an indication as the United States central bank officials continue hinting at scaling back to avoid wild asset bubbles. While the Federal Reserve hasn't directly mentioned Tesla Incorporated and Bitcoin, the central bank is clearly not happy about the pervasive talk of asset bubbles, and its officials are now all hinting at a scale back on bond purchases, currently expected to see the Fed buy up to $80 billion in treasuries per month. As the meeting minutes of the Federal Open Market Committee (FOMC) December meeting have now circulated after being released on Jan. 6, the total cryptocurrency market cap fell by more than $200 billion and the Bitcoin price dropped to $30,229 with altcoins also correctly sharply. Tesla's market cap also fell to $768 billion with its share price dropped nearly 8% from $880 to $811. As 2021 began, the stock market has been compared to a lucky slot machine. Just close your eyes, pick a stock, and watch your money surge. Although the central bank hasn't said directly that it's worried about the surging price of Tesla shares and Bitcoin, the subtext from last week's round of speakers at the FOMC could be interpreted as an early sign that the Fed's financial stability mandate is starting to weigh on some policymakers who have so far been focused on achieving maximum employment and consumer price stability. Bond king Jeffrey Gundlach, The founder and CEO of the Double Line Capital LP said in a recent interview with CNBC TV that Bitcoin looks like a bubble ready to burst. The investor said that the cryptocurrency hit bubble territory once it surged above $23,000 and he does not feel conformable with the crypto's current levels. Gundlach is not alone in his assessment. Scott Minerd, chief investment officer with Guggenheim Investments, tweeted today, Bitcoin's parabolic rise is unsustainable in the near term. In addition to the Bank of America Corporation's checklist of signals now indicating an impending bear market correction in risk assets, billionaire investor Mark Cuban tweeted today, watching the cryptos trade, it's exactly like the internet stock bubble. Exactly. I think BTC, a few others will be analogous to those that were built during the dot-com era, survived the bubble bursting and thrived, like AMZN, eBay, and Priceline. Many won't. Bond traders have been working with the expectation that the U.S. central bank would step in to halt a sustained move higher in yields. Only a month ago, many expected the central bank to alter its asset purchases and buy more longer-dated treasuries. From the Fed official statements in the FOMC minutes from December, these plans appear to have been sidelined and the discussion has turned to how best to scale back asset purchases. Philadelphia Fed President Patrick Harker discussed the possibility of scaling back while answering questions at a virtual event last week. Scaling back, he said, I could see, potentially, that occurring at the very end of 2021 or early 2022. But it is all going to depend on the course of the economy, which will depend on the course of the virus. It could cause disruption in the markets if we try to do it too soon. So, I have many degrees of caution on this, to just be steady as she goes until we start to really see the economy healing. Adding further to the taper talk was Dallas Fed President Robert Kaplan, who said that while he thinks the COVID-19 pandemic continued to weigh down the economy for most of 2021, the Fed should start to consider when to start tapering once the economic recovery and the majority of the population. Kaplan said, there will be a point at which it'll be much healthier for the economy and for the markets to be weaning off some of these extraordinary measures. Fed Vice Chair Richard Clarida, however, remained quite consistent with bond trader expectations of the previous months, stating, my economic outlook is consistent with us keeping the current pace of purchases throughout the remainder of the year. It could be quite some time before we would think about tapering the pace of our purchases. Bitcoin, Tesla and scaled back. As the Federal Reserve continues buying government debt with printed money, inflation will take off along with the national debt. As a result, asset prices were expected to continue to rise, and the dollar would continue to lose value. Besides holding gold or silver, the new form of digital gold, Bitcoin has been gaining momentum with mainstream investors as a hedge against economic turmoil. As the FOMC meeting minutes circulate and officials continue to hint at a scale back in quantitative easing programs, both Tesla and Bitcoin have now begun to lose steam and are taking a significant breather from their bull runs. How directly this tapering talk has affected the markets is still questionable at this stage, and it could simply be a case of institutional giants now taking some of their profits out of their Bitcoin investment after a 300% in BTC price recorded at the beginning. The Fed official's comments toward scaling back asset purchases is now calling into question one of the strongest pillars of the rally in risky assets over the past several months. The Fed now wants to foster a strong labor market and inflation reliably above 2% so that it can eventually operate away from the zero lower bound of interest rates. Whether it can make that happen and just how long that will take is the real question. For now, as the Fed appears to be moving towards getting financial stability under control, the central bank appears to be very unhappy with the current level of rampant speculation in asset prices and expanding bubbles. The most obvious bubble assets are Bitcoin and Tesla. Although the Fed has not specifically mentioned Tesla or BTC, the central bank officials' continued mentioning of taper talk last week could be an indication that they will seek to stymie these assets, as well as a driving factor in the recent plunge in both Tesla and Bitcoin. Hit the like button and subscribe to the channel.